The following Nasdaq Behind the Bell podcast was recorded live at the 2017 NRF Annual Convention and Expo, retail's big show at the Jacob K. Javits Convention Center in New York City. Here are your Nasdaq hosts, Bradley Smith and Josh Matches.
You're listening to the Nasdaq Behind the Bell podcast. Josh, it's been a great 2 days.
It's been wonderful. We've had a lot of exciting speakers, but I think we have the most exciting now.
And he's homegrown from Nasdaq as well.
Yeah.
So we've got with us Josh Elman, Senior Specialist at Nasdaq Corporate Solutions Advisory Services. Josh, great to have you here.
Thanks for having me, guys.
Nobody better to kind of close out our 2-day experience here on the Behind the Bell podcast with, other than one of our own. Just to kick things right off, what do you see overall as the state of the consumer?
Sure. Well, I think the most important, or an important thing to kind of take a step back here is where I sit in terms of the publicly traded markets. Mm-hmm. So we work with investor relations teams of public companies, and I primarily work with consumer-related names, and we are a team of 6, so we work with quite a number of consumer companies, helping them to identify the capital that's coming to market, explaining what is transpiring in terms of capital market flows, and just giving them an idea in terms of overall investor sentiment. So in terms of the state of the consumer, to your question, the consumer on paper is really strong. So if you are a economic nerd, kind of like I am.
Well-dressed economic nerd, though.
Yeah, exactly, thank you. The consumer on paper is great. So employment is obviously pretty good from where we've come from the financial crisis. I think the unemployment rate right now is at 4.7%. So that's quite low compared to the last 5 or 10 years. And we're also seeing what was really nice in the most recent employment report was wage growth. So we're starting to see wages pick up, which usually moves or helps the consumer spend more, and ultimately helps the consumer companies that we work with. So from an employment perspective, everything's great. And we're also seeing very high confidence levels amongst consumers. So on paper, the consumer is very strong. However, it is kind of a pick your market sort of game. We are seeing pockets of strength and pockets of weakness when it comes to the consumer. So, for example, we're seeing a lot of weakness amongst department stores, and it all flows into the brick and mortar versus e-commerce world. It's obviously the trend, and it continues on the same trajectory of consumers are moving more online, doing their spending online versus going to those brick and mortar department stores. So where we're seeing a lot of weaknesses is around the department stores, and they're ultimately trying to figure out how to right-size their businesses in order to meet the consumer demand that they still are seeing.
And Josh, who's succeeding in this climate? What are the kinds of retailers that are actually taking advantage of it?
Sure. So we're seeing a lot of strength amongst beauty names. Ulta Beauty is certainly one example. We're seeing a lot of good things and hearing a lot of good things. Another.
Why do you think beauty is succeeding?
I think ultimately.
Gosh, they're pretty.
Yeah, exactly. No, exactly. I mean, I think the current theme is invest in yourself. Obviously, you need to buy beauty products for that to happen, and we're definitely seeing
maybe
more
the millennial
spend.
Consumer and perhaps
Yes,
younger
millennial
generations, they do
consumer.
care a little bit more about not only appearance but being healthier.
Yeah, exactly. So it falls into that overall trend of consumers looking for having a healthier attitude, and how do they invest in themselves. And certainly beauty is certainly one area that is seeing some nice dividends as a result of that, that theme.
What other areas?
So we are seeing strength in athleisure wear. It kind of falls into that same category.
So like a Lululemon out there.
We just had them to ring the bell last week.
Yeah, exactly. So Lululemon has been doing quite well. They were just down at ICR. had some pretty good commentary around their fourth quarter. So, at the end of the day, that's another subsegment of the retail space that's doing quite strong. And then one other area that actually is a little surprising, especially towards the end of the year, is actually autos. And autos falls into that retail space, but we're seeing very strong auto demand. And it's if you looked at the Commerce Department's most recent report on commerce sales, you could see the top line number that they do report showed excellent auto sales to close the end of the year. So that's another pocket of strength for the retail segment. But on the flip side, like I said, we're seeing weakness in apparel, in department stores. Those names are really struggling as, again, the consumer shifts to more online spending. And, we're starting to see retailers starting to, I think they get it, but they're starting to take steps in order to address kind of the shift to e-commerce. So we have, towards the end of last year, Walmart acquiring Jet.com, and a huge deal, obviously saying, we have all these brick and mortar stores, but we do need to figure out a way to address the consumer that's moving online. So that was obviously a big decision.
And they have to compete with Amazon.
Yeah, exactly. And Amazon, from what we're hearing and seeing, had a very strong holiday season.
And so if you're a retailer, you're looking at the current state of the market right now. You're looking at home sales that are at 10-year highs. You're looking at this kind of on-paper sweet spot, and you're kind of thinking to yourself, why isn't this fully transitioning over into our sector? Is that right?
Yeah, that's right. I mean, there's always uncertainty out there. With the election, there was a lot of bullish rhetoric and a lot of capital that did flow into the space after the election, but we're starting to slowly see a pullback in terms of capital coming into the space, and I think that's a result of some of the commentary we're starting to get from some of the retailers, letting us know that while our forecasts were bullish, the actual results may not be as strong as what was expected, especially in some of those names like the department stores that really have had a difficult time trying to figure out how to best address the consumer.
And
I'm sure there's a lot of uncertainty too ahead of Inauguration Day.
Yeah, definitely.
Yeah, absolutely. But what's really nice, what we're seeing from our perspective, is we are seeing capital flow into the U.S. market to this day. So we just reviewed some fourth quarter data from Lipper, and that showed significant asset flow from abroad to the U.S. market, and obviously that capital needs to be put to work. Now, the corollary to that is that active management versus passive is another kind of $64,000 question, if you will. We're starting to see more assets flow into the passive side of the investment world versus the active management side. So in terms of for a retail company and investor relations officer, the competition for capital is so much greater in terms of the active management side. Now, there's always going to be, if the capital flow is moving into the index, the passives, in the ETF world, there's always going to be that demand. But at the end of the day, the active management side is very vital to all these names to help grow their stock price. And it's a very competitive dynamic, even though we're seeing strong capital flows into the U.S. equity market from abroad.
Oh.
Very interesting.
And so I guess from an international perspective, how would you see some of the U.S. trends differing from those that are, in those different markets, the foreign exchanges, if you will?
Yeah, so the UK, I think, is, and we primarily, we do have global teams. We have teams that are segmented in Europe and Asia and Australia. I primarily focus with U.S. issuers. But at the end of the day, from what I'm hearing and seeing, the U.S. is the best ball game out there. So we're hearing a lot of and seeing some weakness in the United Kingdom market, and a lot of that stems from the Brexit, that big vote that transpired in June. That definitely has created a lot of uncertainty.
Made a few waves.
Yeah, exactly. So we're seeing investor sentiment shift from the UK more towards U.S. equities. At the end of the day, too, I think with some of the rhetoric that's coming out of the new administration, a lot of international and foreign investors are looking to the U.S. because the administration is supposedly unveiling very pro-growth initiatives that will help grow the United States economy and ultimately put more money back into the consumers' wallets, and that will ultimately trickle down to the consumer world and the overall U.S. economy.
So in the state of the market, when we're hitting or grazing all-time highs pretty consistently right now, for consumer sentiment and spending, what do you think that's doing, or what has it shown that that's doing as of right now?
Yeah, I mean, I definitely think that, like you said, we've hit all-time highs.
Yeah.
We've missed that elusive Dow 20,000 number,
Exactly.
even though we came less than
0.37.
Very close.
Exactly,
Yep.
less than so very close to hitting that number. But at the end of the day, in terms of the equity market, investor sentiment is pretty strong.
Okay.
Like I said, we are still seeing asset flows into the U.S. equity market.
Yep.
And to be honest, the United States equity market is, in terms of U.S. Financial instruments, it's really the only game in town. So, savings accounts don't really pay much. Bonds, with interest rates rising, are a tough game. Real estate's doing okay, but at the end of the day, the equity market is probably your best investment in terms of returns, at least in the current period. So we are seeing a very favorable bias towards the U.S. market.
Any interesting retail trends that we should expect this year?
Yeah, I mean, I think ultimately retailers that have historically done well are trying to figure out how do we address the consumer that's staying at home. More and more consumers are shopping online. They're not going out to the stores. So consumers in general are trying to figure out how to do that. Now, like I said, Walmart.com has acquired Jet. So we'll see how that all plays out. But we're also seeing, we work with a number of restaurants. So restaurants as a whole are really focused in 2017 on delivery. It's a real big initiative, trying to figure out how do we get our best product to the consumer in the quickest and most efficient manner, because ultimately delivery is the next area of focus for that restaurant space, because the general trend is that he or she is staying at home to purchase their products.
That's really interesting. I wouldn't have thought that for restaurants. I mean, we've been talking all day kind of about how brick and mortar is shifting to be more focused on experiential than the actual sales. But I didn't think about restaurants being kind of having to follow suit.
All the publicly traded, or most I should say, most publicly traded restaurant names are investing heavily in delivery. So you have Panera Bread, for example. Domino's has invested in delivery, but also technology with their apps, the whole pizza segment in general. And if you look at the subcategory, the pizza subcategory, they've been doing quite well because of their investment in delivery and technology. Right. Now you can just order, I think they have voice ordering for pizzas nowadays. So that's kind of the general trend.
And the customization that they offer on the app also, I think, is one of their big differentiators.
I mean, you could tweet at them for goodness sakes.
Right,
you could
and
tweet
receive
a pizza emoji.
Exactly. So we're seeing a whole host of names: Panera, Domino's, Starbucks, McDonald's. I mean, they're all trying to figure out delivery because that's really their next move in terms of trying to get more product to the consumer.
Definitely. Well, pizza's definitely got a big day coming up within the next month, the Super Bowl. So Papa John's always a huge sponsor of that for sure. Peyton Manning will be missed, but all jokes aside, it'd be interesting to see how they do adapt to this delivery culture, and really it comes back to exactly how we're interfacing with a lot of these restaurants. I mean, I don't know about you, but most of the nights when I'm not cooking, I'm on Seamless or some delivery service.
Yeah,
definitely.
And I also think you're seeing it with the Amazon Dash system, where if you run out of a
There
product,
you
you
go.
can just hit a button and it will come to you. I mean, these are the innovative ways retailers and restaurants are thinking about getting more product ultimately to the consumer. So I'm sure there'll be more to come on that front.
So here's a wild thought. Do you think Amazon ever dives into that same delivery service? Because
They
I'm
have
not,
it. They have Amazon restaurants in
with
New York City.
restaurants. I'm just out of the loop.
Yeah, you're out of the
so
loop.
there's-
Goodness gracious.
They're competing with Uber Eats.
Oh, I hate when I'm out of the loop
Yeah,
like that.
Sorry, Brad.
Especially when it comes to food.
Yeah, delivery is really a key theme for a lot of names out there right now. And
Wow.
I think investors are seeing the investment dollars flow into the delivery segment, and they want to know, are you guys going to get this right? Because it is very important if they are committing all this capital to this delivery.
I think the question to ask is if you're, maybe not if you're Panera or Domino's, but maybe you haven't yet made the investment into growing that delivery system. Do you go the route of an Amazon or an Uber Eats over your own R&D and creating your own product?
Yeah, I mean, there are outsourced delivery options. I think Olo is one that's working with a number of private and publicly traded restaurant names. So there are issuers and companies out there that are relying on third-party delivery services to get it right. But like I said, there are other companies that are really investing and focused heavily on getting the delivery business right internally because they think they know their business better than someone externally.
Absolutely.
Makes a lot of sense.
Definitely. Well, great to have you here on the Behind the Bell podcast from the NRF Innovation Lab, and it's been great to kind of speak with one of Nasdaq's own.
Yeah, I appreciate your time, and thanks for having me, both Brad and Josh.
Definitely.
Thank you, Josh, for your insights.